Hi there, this is Bethany with the Oil and Gas Division. We're going to go ahead and get started with our May production figures. We're actually going to take things out of order and start with Justin with the North Dakota Pipeline Authority. Justin, are you with us?
I am. Can you hear me okay? Yep. Bethany, are you able to hear me okay?
Yes, we can, Justin.
Can you hear me, Justin?
Excellent. Well, I can hear you, Bethany. Yep. If you want to go to slide 2, we'll get started there. So I appreciate everyone. Apologize for not being able to be there in person. My name is Justin Kringstad. I'm director of the North Dakota Pipeline Authority. I'm at a public outreach and education event up in Trenton, North Dakota this afternoon, and so I apologize I'm not there in person, but I appreciate the technology that allows me to be there remotely. So as you can see on slide 2, just taking a look around the Williston Basin, we did start to see some numbers trickle in from South Dakota related to the April events. Not a significant impact on the South Dakota production numbers. We weren't expecting that. We know that largely those April storms were focused on northwest North Dakota, as well as what was taking place.
I think we'll, Lynn, if you don't mind, maybe we'll just take you first.
No, not at all.
Yeah.
We can do that while we work out the technical issues.
Okay, go ahead.
All right, thanks, Bethany. Hopefully we'll be able to get connected with Justin and get the verbal part of the Pipeline Authority presentation. He's in Trenton today at the Bakken Rocks Cook Fest, and I'm fortunate enough to be here. Thank you everyone who has joined us online or attended. We're at our July oil and gas update. We'll be talking about May production and April production, oil, gas, and all things oil and gas. So beginning with oil production, we almost recovered what was lost in April. If you recall, we had the back-to-back blizzards in April, and production dropped below 1 million barrels a day to 900,000, just slightly over 900,000 barrels a day average for the month. Justin ran those numbers for us, and that, interestingly enough, caused U.S. storage volumes to decrease by almost 6 million barrels. So the Bakken clearly still has an enormous impact on U.S. production and storage volumes and prices. If you recall, in March, we produced 1.12 million barrels a day. As I said, in April, we dropped to 900,000. In May, we recovered most of that. We got back to 1.06. So we're still about 60,000 barrels a day short as of the end of May of full recovery from the blizzards. Looking at gas volumes working their way through our processing system, we anticipate that June will show a full recovery from that, and that July is actually going to show a significant increase in production. So we are marching towards that maybe 2% production increase for the year, which should put us in that neighborhood of 1.3 million a day by year end. I think that's kind of what the target is for industry. That means that May showed a 17% increase in oil production, just slightly shy of revenue forecast, which was 1.1 million barrels a day. It was 4% below revenue forecast for May of 2022. Price, on the other hand, was more than double revenue forecast. The May price realized was $105.08 a barrel, North Dakota market price, and the revenue forecast was based on 50 still. So we saw a similar increase in natural gas production, slightly smaller, about 14%. So gas oil ratio pretty much remained constant. Saw an improvement in gas capture statewide that jumped to 94%. And we'll give a little more detail and flavor on gas capture in just a minute. Looking at well permitting, that continues to rise, as does the rig count. So those are both major positives for the industry. Still really struggling to find workforce. So as of this week, it looks like we have 18 frac crews running. That's a big improvement. Prior to COVID, we had 25, as you recall. And we stayed pretty steady. Today's rig count matches the average for the month of June, which is 42 drilling rigs. Interestingly enough, we now have one operating on federal surface. And when we look to our southern faraway neighbor, New Mexico, they have 110 rigs running in New Mexico. So they are rapidly outpacing us in terms of drilling. And as you can see, pulling away in terms of production. Their April production was almost 1.5 million barrels a day. So they're rapidly increasing production. Pretty much stayed steady April to May in terms of wells waiting on completion. Again, that was the clearing of the blizzard situation and people getting back to work. I think the surprise to me was that the inactive well count jumped to over 2,400 wells in the month of May. And so what we saw there, a reason for a large part of that is we had a large group of wells on non-completed well waivers. And the commission had instituted a policy to allow people that had drilled new Bakken wells to leave them in a non-completed status. But that expired because oil price is so high. It expired when load limits went off in the month of May. So we saw a pretty good uptick in terms of the number of inactive wells there. But we're very hopeful that those will not roll over and turn into abandoned wells. Completions were significantly down in June. And I don't have a good explanation for that. They were 32% below revenue forecast at only 27 wells completed. It may be a reporting issue. You will recall that we had some significant website problems. And so that may be a reporting issue, and that may correct itself as we move forward. So we'll watch that number. I wouldn't go to the bank with that 27 completion number, but it is concerning, and we'll be looking at it. Producing wells went up a bit, but we haven't started setting new records again. The Fort Berthold activity matched what happened in the state. We're not back to record levels of production or drilling, but we've almost recovered from the April downturn. And you can see as we move into the month of July that U.S. Storage volumes are actually back into the 5-year band for U.S. storage volumes. So we're
the leader to admit.
I don't know what the leader is going to admit. No, that's just a bad joke. So at any rate, that's a little bit of positive news that we're starting to see U.S. storage volumes tick up, and I think you can attribute the 40 or 50 cent gasoline price drop to that. It's partially that, and it's partially the concern about recession coming, and it's maybe more recession worries than it is U.S. storage volumes, because our refining capacity is running flat out at maximum refining capacity here in the nation. So seismic activity very, very slow. About all we have going is the monitoring project at Red Trail, and then the monitoring project down at Cedar Hills. Looking at gas capture, as I said, some improvement there. So statewide Bakken jumped 1% to 95%. We saw a significant improvement in the trust area of Fort Berthold, and so I want to commend our trust Fort Berthold gathering companies, Crestwood and Targa, along with One Oak, for the work that they're doing there. We did see a little bit of improvement in the fee area of Fort Berthold. However, I was up there last week, and there is just a significant amount of flaring going on south of Newtown, and so we're watching that. We do believe that the connection between the Robinson Lake plant and the Outrigger plant north of Trenton will correct a great deal of that, along with the expansion that's going to happen up there at Robinson Lake. We saw improvement at Big Bend, Deepwater Creek Bay, and Twin Buttes, and a little bit at Charleston, but still they're running below
the Industrial Commission 91%. And so we may have some production restrictions in the month of, let me see, I guess we'd restrict August production. The one thing I want to mention on federal litigation and the federal situation, you all know what happened with the Supreme Court and EPA decision. And so even though that, I have kept that on the list because it hasn't been dismissed yet with regards to their methane rules and their clean power plan. But the one thing that we do have new activity on is immediately following the lease sale in North Dakota, there was a group on June 28th, Dakota Resource Council, Center for Biological Diversity, Citizens for a Healthy Community, Living Rivers and Colorado River Keepers, Montana Environmental Information Center, Rio Grande River Keepers, Sierra Club, Waterkeeper Alliance, Western Watersheds Project, and the Wild Earth Guardians sued the Department of Interior to challenge the decisions to go forward with that leasing on 173 parcels, and that includes those in North Dakota. So those leases were put up for auction, and they were bid on, but the leases haven't been issued, and that'll be held up by this suit, which was filed in DC, in the federal court in DC Circuit. So I anticipate that North Dakota will intervene in that court case and make sure that we have a voice with our opinions. As you know, it's the opinion of the North Dakota Industrial Commission that there isn't near enough leasing going on to keep our production stable and to develop the resources we have on our federal lands. And so we're going to continue to push in every way that we can to move that forward. But even with the Department of Interior going forward with leasing, as you can see, there's a large group of environmental activist organizations that are pushing back just as hard in the other direction. So that is our April-May production report. Good news on production, good news on prices, and really every other parameter with the exception of our inactive well count jumping up, and then the challenge to federal leasing in North Dakota and in the rest of the western states. So we'll take questions.
Yeah, let me check here. We don't have any questions at this time.
Everybody wants to get to the barbecue.
That's right.
All right, we have a question from Dave.
All right. One of the things that I think you mentioned in one of the previous things was during those April snowstorms, the power was out. That was a big problem. I know there's a lot of discussion. Have oil companies approached regulators here saying, is there any way to improve the power grid so this doesn't happen here?
Great question. So what Dave mentioned was that the loss of electrical power during the April blizzards was really a primary driver behind so much production going down and then the slow recovery. And he wondered if the oil and gas industry has been approaching our regulators about improvements to the grid or ways that could improve. I'm not aware of any, Dave. I have brought it up at a couple of talks or group discussions that we've had. I mentioned the fact that back when we were looking at setting up or installing gas-fired peak power plants, we strongly suggested that those be located at the natural gas plants so that they had a source of fuel and a source of electrical power to the gas plant that was really non-interruptible. That hasn't happened yet, but that's a conversation that's going on. That's the only conversation I'm aware of is, should we be looking at installing or moving those gas-fired peaking plants to immediately downstream or upstream of the natural gas plants so that when there's a loss of power to the grid, that the gas plants can continue to operate and we don't have to shut in oil wells because we can't do gas capture. So that's the only conversation I'm aware of. Good question.
You said, How many frac crews are working right now?
18 is our current count.
What's optimum?
For the optimum that we see for the state of North Dakota is 50 to 55 drilling rigs and around 25 frac crews. That would allow us to build month to month to month small production increases. We could make up for any decline in the wells, and it would allow us to grow our production at that 2% annual rate. And so that would be just an ideal slow growth opportunity for the state of North Dakota. Would be somewhere between 50 and 55 drilling rigs and 25 frac crews. So we still have a ways to go to get that workforce deployed.
So that's the big challenge.
That is the big challenge, is finding the workforce and people that want to go to work. I visited with one company a couple of weeks ago. They had hired 8 people. It was actually for a workover rig crew. Day 1, 2 of the 8 showed up, and day 2 only 1. So they had to send that one person home. So it's not even just finding people who will apply for the job and sign the contract, but people who will actually show up on the job to do the work. So this is going to be a real challenge, and I'm excited about now the new developments that are taking place in Watford City at the Career and Technical Academy there. But that's going to take a year or 2 years to really bear fruit. So, but we have to stay consistent and push the fact that in the absence of a nationwide recession, which would send a lot of unemployed people to North Dakota again, in the absence of that, we're going to have to grow our own workforce, and that would be a more stable, steady workforce anyway.
I don't mean to belabor the point, but what does somebody working on a frac crew make?
So the typical starting salary for somebody working on a frac crew is around $60,000, and if they're in a supervisory position, they're into 6 figures. So it's not a low-paying job. It does have difficult hours and working some weekends, and that seems to be what people shy away from. But the salary is fantastic. The hours, not so much, and the work is hard. Yeah.
I have another question. We just finished the lease sale. Is there anything on the horizon for any more lease sales down the road?
You know, Department of Interior has indicated that they may postpone the remaining lease sales for this year based on this lawsuit. And so it's going to be really important to get this lawsuit moving and get a decision behind us quickly so that we don't lose the rest of the year. But they've been challenged now in federal court for the Louisiana suit, for the North Dakota suit, and now this one has been filed, pushing back from the other direction. So I would say the probability is pretty high that the remaining 2022 lease sales will not take place. And that is a really serious situation for the citizens of the United States, and particularly for North Dakota. North Dakota gets 50% of the bonus and 50% of the royalties, and then half of that goes to the county that the oil and gas lease occurs in and the production occurs in. So it is a major revenue source, but it also stands in the way of us drilling a couple thousand wells in the state of North Dakota. So.
Great. Do you have any other questions? We have one question. Do you have any updates on the GTL plant plan for Williams County? Is it still on schedule? When it started? Any changes to the project status?
So the question was about the gas to liquids plant in Trenton. I don't personally have an update. I know that they are there at the Bakken Rocks Cook Fest today, and they're actually making a presentation. They probably have finished it by now. So If you have the opportunity to be there or to talk to Justin or somebody who is there this afternoon, they would be able to give an update. I did hear an interview with one of the principals on the radio this morning. It sounded like progress continues in terms of the engineering and the business development studies that need to take place. But I don't have much information. I know they're there in Trenton today.
All right, that's all I have for questions for you, Lynn. Justin,
Thanks, everyone.
Like we got everything squared away on our end, so we'll send you live here.
Perfect. Are you able to hear me, Bethany?
I can now.
Okay, great. If you want to queue up my slides and let me know when you're on slide 2, that'd be perfect.
Okay. Okay, go ahead.
Perfect. Well, thank you, everyone. I apologize for not being able to be there in person this afternoon. But again, my name is Justin Kringstad, Director of the North Dakota Pipeline Authority. I've got just a few things to cover here. We'll take a look at slide 2 first, taking a peek at some of our neighbors. And you just heard the update from Lynn on the North Dakota side of the Williston Basin. Eastern Montana, some numbers were starting to trickle in for April. It was looking like, certainly those April snowstorms were influencing that April production. It wasn't complete enough to post yet. But so I'm anticipating we do see some negative influences as those April numbers trickle in from our neighbors to the west there. And they also did lose 1 drilling rig as of today when I checked. So last month at this time they had 3 active oil and gas rigs. They now have 2. And then our neighbors to the far south, again, you'll see the April numbers popped in. Pretty minimal impact. We know that those storms largely impacted further north in the Williston Basin area. So South Dakota was largely spared during that time frame. And currently still 0 drilling rigs on the South Dakota side of the Williston Basin. If you go to slide 3, again, now taking a peek, I want to focus on the bottom line, which is that orange gas oil ratio. And so we know that the trend has continued to be up. We did see with these May numbers that gas oil ratio drop, and so that had me obviously curious about why that trend wasn't continuing. One theory that I'm going to dig into a little bit deeper is that we know, particularly when COVID hit, we saw a large number of wells shut in for a period of time, and what takes place when those wells get shut in, we see that reservoir pressure start to increase again, and the gas oil ratio lowers much closer to its original GOR. Obviously, these wells during those April blizzard events into May, they weren't shut in for an extended period of time, but they were shut in for some period of time. And so my curiosity and theory that I'm going to dig into is whether or not that temporary shut-in of those wells may have influenced our gas oil ratios, and whether as we move into June and July and as those wells continue to produce, if we see those GORs start to rapidly go back up again. Slide 4, we did see some increase in the amount of crude by rail, both from percentage and a volume standpoint. We can see that trend on slide 5. Bethany, if you advance that, please. We did see, again, a slight loss in market share on our pipeline network and an increase then, which is that purple line, in the use of crude by rail out of the region. If we take a look at pricing on the next slide around the U.S., continuing to see PAD 1, PAD 5 at those highest priced markets. But when we see which of those refining centers were attracting North Dakota barrels off of the rail network, it was largely headed towards that PAD 5. So on slide 7, again, taking a look at the trends, that high and low estimate for where we were falling, somewhere in that roughly 150,000-160,000 barrels per day. So just over roughly 2 trains per day on average, leaving the basin full. On slide 8, again, the only 2 areas of the U.S. that were receiving crude by rail shipments, according to the EIA, at least through April, was, again, PAD 5 and PAD 1. We'll continue watching that PAD 1 market. Again, we know that there is a need in that area for light sweet barrels. We know that historically there's been, at least a portion of their crude slate coming from Russian sources. So we will see if we see other foreign barrels start to backfill that, or if we in the following months start to see any type of upward trend in potentially domestic light sweet barrels from places like North Dakota backfilling and uptick in those deliveries to that marketplace. When we look at where prices were, at least as of this morning, I know they were strengthening throughout the day. Continued real strong pricing up here in the Midwest. Clearbrook over $4 premium to WTI at that marketplace. We know that certainly not all of the barrels in North Dakota are marketed through there. It's likely less than a quarter of the barrels out of North Dakota heading through Clearbrook, but that certainly does have a positive influence as it works its way back into the Williston Basin here for the producers, the royalty owners, and then obviously the state as well. We did see a slight strengthening in that Brent WTI spread, over $3.50 as of this morning, and relatively strong, not as historically strong as it has been down in those Gulf Coast areas. So again, those LLS and different light sweet grades down in that Gulf Coast obviously influencing the value of those barrels coming down on the Dakota Access Pipeline or other pipelines that are reaching that Gulf Coast marketplace. Slide 10, really no changes in those imports, exports between the U.S. and Canada still. Been now a number of months at zero movements going north out of North Dakota onto the Canadian systems for marketing. On slide 11 then, switching gears to the natural gas side, again, no change from April to May as far as the percentage as well as the percentage category of that gas being flared. So we're continuing the story, and the challenges going forward are going to remain on that orange piece of this puzzle, which is how do you continue to maximize the amount of gas that's going down the sales line and minimizing the amount of gas that's going to the flare pit on those connected facilities. On slide 12, again, we'll pass through that. That is just that historic context related to those flaring percentages. On slide 13 then, some positive news that took place in the month of May. We did see new wells selling gas outpace the new producing wells, which is always an encouraging sign when the gas gathering companies are out there making connections, getting wells that are previously were not connected to gas gathering or gas sales opportunities, getting those on their networks and getting that gas to market. On slide 14, we saw the EIA weaken some of their price outlook slightly. They're just at that sub $90 range out into the second half of 2023. So they are anticipating some price weakening as we finish out the summer here. Obviously, we'll see how that plays out, but we do use that information then in the forecasting efforts that you'll see here on slide 15, particularly as it relates to the oil and gas, and in this case, this graphic taking a look at the natural gas outlook, which is, again, in the current, as we sit today, we're in a very good position. We've seen the flaring numbers, we've seen the success that the industry's had, but again, not taking our eye off the ball, knowing that in the relatively near future, we're going to need some incremental solutions, and getting those in place at the right time is going to be critical. And then last thing, just touching on some of the gas transmission pieces of the pie. On slide 16, that's just for reference. Slide 17, as we've come out of that April timeframe, coming out of that May timeframe, we're seeing again that North Dakota share of northern border start to creep up again, back up into that 70+% range. And then the other thing that's been interesting on slide 18, we've been seeing over the last month or so, the BTU levels start to come up again on northern border. So we'll keep a close eye on this. Obviously, this influences capacity. It influences potential regulatory changes in the future or tariff changes by the pipeline operators in North Dakota. Again, that 1100 number that you see highlighted on this chart, it is not currently a benchmark that the industry needs to hit. It was proposed in the past, and it likely could be back on the table if certain pipeline operators deem it to be appropriate for their system. So again, we'll keep a close eye on that. So with that, Bethany, that will conclude my formal remarks, but I'd be glad to answer any questions that anyone in the room or online might have.
Just check here. We do have one in the room here.
Justin, on the BTU thing, why does it fluctuate like that? Is there any particular reason that happens?
Yep, so the good question. So the fluctuations that we see on the BTU levels largely has to do with what the gas processing companies are doing with their ethane components. And so when we were seeing the BTU levels going up from, if you look at slide 18, largely from that 2016 onward, we were seeing growing volumes of ethane getting put into the Northern Border Pipeline. And so the ethane has a higher BTU content than methane, and we were seeing that reflected in the overall numbers. Why we saw from early 2021 that decrease was the economics had changed such that there was some economic incentives to capture that ethane and not put it into the Northern Border Pipeline. And so that was certainly then starting to bring those numbers back down below that 1100 level. So it's largely market driven and has to do with what companies are deciding to do with that ethane component.
I have another, and that goes to why, and I'm just curious, why have we seen no exports into Canada?
So right now, so on the crude oil side, another good question. Why have we seen those numbers largely go down to zero? In the past, there was two reasons historically of why barrels were being marketed up into Canada. One was the pricing. There were some blending opportunities or strategies that certain companies would use where they would take a light sweet Bakken barrel, take it up into Canada. They would blend it with other net grades to upgrade those up on the Saskatchewan side of the play. They weren't going far into Canada. They were just going over the border and being marketed on the pipeline network up there, but typically in a blended state to take advantage of some pricing opportunities. And the other reason historically that barrels would move up there was strictly a capacity constraint. But as we've seen North Dakota pricing strengthen over the last year or two, we've seen historically very strong pricing relative to WTI. That economic advantage or situation has largely been erased, and plus the adequate pipe capacity that we have in the marketplace today have largely eliminated that need and those market drivers to push those barrels north.
I have a couple more. Okay, sorry. Justin, have you heard anything about any further gas plant outages the rest of this year?
So there will nothing formal slated right now. I know that there are some smaller, there's always maintenance season coming, and largely some of the larger, on Northern Border, those were done earlier this year. There are going to be some smattering of different maintenance projects, and I think that's a good reminder. Maybe for the next month webinar, I can try to put together some of those schedules, and we can start putting some context around what that might mean for the industry, at least as either compressor stations have maintenance, gas plants, any other type of system outages. So that I appreciate it. I think that would be a good slide or two here coming up.
And one more, and I'll bet you even anticipated this one. Any further interest in the Bakken to the River Valley Pipe?
So on that front, yes. So we are continuing that. As noted before, we have that application process open. August 15th is the deadline for that. And again, many of the same companies are continuing to work that project. I don't have any new updates today that I didn't have in the past, but certainly that interest level is still there. But again, we won't have more details likely for about a month or so.
So what's your favorite, ribs or brisket?
So, yeah, up here, obviously, you know, I'm up at Trenton and for those education outreach. So it is exciting. We just got done with the formal presentations, and now I get to go to an education booth, and it's always exciting. I'm here to help answer questions and engage with the folks. It's always great. It's a wonderful opportunity to connect with the citizens that live and work in this oil field every day. So I'm looking forward to the conversations this evening.
So Justin, we had a question earlier about the gas to liquids project. Well, was there information provided at the education session about that?
There was, and I stepped out during part of Nico's, so Nico's CEO of Cirelon, which is heading up that project, and I know Nico will be walking around here at the event, and so I can double check with him. But my understanding is no major changes to any of the timelines that have been laid out prior. I know that Nico was on the radio this morning, and there was, I believe, some Facebook Live of this afternoon's presentations. I don't know if Nico's was on there, but that might be another source for folks to dig into and take a peek and see if there's any additional information that was shared at that point.
Okay, let me just double check. Okay, that is all we have for questions for you, Justin and Lynn. Thanks for joining us, everyone. Bye.
But he didn't answer